Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, October the 25th, 2024. Essentially, most cryptos we're tracking are still in a sideways to down trend channel. That's really all there is to it. So we still don't have strong trending cryptos, which is frustrating. And it's been frustrating now for certainly 6 months, at least since the March highs. Therefore, there is always a plethora of different Elliott wave counts available to us because in a non-trending market, there are always many possibilities. And that is the unfortunate nature of Elliott wave, that we then don't have much certainty on exactly what's going to happen. Is it an ABC, or is it one of a ending diagonal? Is it a larger B wave? You name it. Many options. Is it a B wave within a larger A wave? There's so many options available, which is never ever nice to have, but that's the cards we're dealt. I cannot change it. Nothing can trend up all the time. There must be times of sideways consolidation. So we literally have to sit through this. However, the longer this sideways consolidation takes, most likely the bigger the rally will be that comes out of it. That's what they say. The longer the base, the bigger the rally. And basing we have, there is no crash, regardless of what anybody says. There's still no crash. So our focus remains on Binance Coin, Bitcoin, Solana, and ETFs like BITO and the like. And we've added Tron as well. We've discarded Cardano. We've discarded Avalanche. We'll kind of keep an eye on Link, Matic as well. We think those are all rubbish based on the price action. Remember, price is the aggregate opinion of everybody who's involved. And currently, the aggregate opinion of everybody involved on those ones is they're garbage. So then I'm not going to touch upon those. I'd rather look at those that are promising. And they eventually might also turn into garbage, but for as long as they are golden goose eggs, we'll keep them on the map and on our radar and on our screens. So the big boy Bitcoin, I think, still has most potential. I'm not even going to touch on Ethereum anymore until it breaks above 2,800. As I said before, I'm not too keen on Ethereum either, because the market is not too keen on Ethereum either. I'm sorry, I have to follow the market. If the market takes a dump, then I know it stinks. And stinking it does until proven otherwise. I'll keep an eye on it, but otherwise, I'm just regurgitating a McDonald's meal that has been already thrown into the garbage a long time ago. I'm sorry, that's just the way it is. That's my opinion based on the price action, which once again is the aggregate of everybody's opinion. So your opinion is included in it as well. That's just the way it is. And with that, we might have this nested 1-2 setup in Bitcoin, right? That's still very possible. And we thought we could top out in a B wave before we see a C wave. I'm going to go over that in a moment. I had the slides in the wrong order, but this is the nested 1-2 setup. 1, 2, 1, 2, 1, 2. And at some point, also this one will have to kick in. If it doesn't, we'll have to move on to something else. So I like this one. Why? Because the relationships between one and one are very nice. So this blue wave one is shorter than this orange wave one, which is shorter than this gray wave one. Remember, this is still a potential. Why? Because we've gone nowhere since the beginning of this chart, which is pretty much April, right? So we've done, part of my French, jack and shit. That's really what it is. I'm kind of showing you my frustration with this price action, but it is what it is. It is very nauseating and very hard for me as well to make soup out of it that you can eat and drink, not the garbage like Cardano that nobody wants to eat and drink. So we're back to where we were late February. So this thing has done nothing. Great if you're hodling, wonderful. You've got a better stomach than I do. But this is pretty much where things are at. And that means, once again, that the Elliott wave will provide us several different options until one or the other is proven correct. So remember, all we do is provide you these potentials. Then the next thing we do is provide you with levels below. In this case, this potential starts to break down. Those levels can be used as stops, right? That's how you apply this work to your trading. So in this case, if you want to go long for a rally to the 80,000s, you ultimately don't want to see things break below 58,811. Okay, that is truly the stop you don't want to see. Why? Because this blue wave 2 cannot go below this orange wave 2. If this is indeed the true wave count, that we don't know yet. We only know it beforehand, but this is the potential. So you have a risk here of about not even $8,000, and a potential here of at least, I would say, probably 12,000. No, sorry, almost $20,000. Potentially even more. So that's your risk versus your reward. And then you can decide if that's what you like to take or not. And I know this has changed over time, but again, I can't predict the future. And if we have overlapping price action, things do tend to fluctuate. And ultimately, again, if we stay above the October 6th low, which is this 2, we're fine. And then the next one is the September 6th low and then the August 5th low. Somehow this market likes to bottom early in the month. So we might actually look for this wave 2 to bottom somewhere early November, around the US elections. Wouldn't surprise me. I've seen some posts on stock market where historical data shows that the stock market tends to kind of meander sideways for the last 2 weeks of October in an election year. And then we'll get a hip hip hurrah rally once the new US president has been elected, or no, not inaugurated. That will not be until January. And whoever that might be will get a rally. Again, I'm not much into politics. I think you should vote for those that stand for your values, and do not vote for somebody you're against, so to say. You're voting for one because you're against the other. I don't think that's the right way to vote, but that's my opinion. I prefer to vote for those that stand closest to my values. But again, we're not going to dabble in politics. So we've topped potentially for this wave B. Okay, I like it. We've done a 76.4% retrace so far, right on the top of the target zone. And we've broken below it. And if we then, again, assume simple Fibonacci extensions, as you can see here, we can go to the top of this target zone and potentially a little bit lower. So this C wave can go this low. See that? That's a different color. Maybe I should have used yellow, or for example, or orange. But I'm kind of starting to run out of colors, or pink, or whatever floats your boat, so to say, from a color perspective. So anywhere between 64,375 and about 61,600, something like that, we should bottom. So you can see this wave C overlaps with the ideal wave 2 target zone. I've placed this one here at about 63,000 because the Fibonacci extensions would allow for some nice overlap with each other on different wave scales, right? The 1, 2 is in orange. That's a 1 degree higher, and then the 3, 4. So we can easily, of course, just bottom here at around 64,000, and then we simply going to move higher. But for now, we're going to keep this as is. There's nothing that says it has to follow, but this looks pretty good. We've topped so far. So a break below Wednesday's low will target, once again, anywhere between 64,200 and about 61,600. I would say with an ideal target right around this 200-day moving average, right there. It wouldn't surprise me if that's going to hold. Which is at about 63,200, somewhere around there. So that would fit really, really nice. And of course, if we break out at any given moment without moving to that ideal target zone, so break out above this potential 1, everything should be question mark, 4 question mark, 1 question mark, 2, 1, 2 question. Everything should be question marks at this stage because of the sideways disaster this is still in. So if we break out above, in this case, about 69,500-ish, 600-ish, somewhere around there, that is wave 1. Then this wave 3 is already underway, and then the wave 2 is already topped, and we see a nice extension. Alternatively, once again, the ending diagonal, it has still not been disproven, so it's still possible. And then we have the 1-2 setup, and then a very brief wave 3, just a little bit over the length of wave 1, so it's fine. So now wave 5 can do whatever the F it wants to do. Pardon my French, but that's really what it wants to do. And it can easily go to this 78 to 84,000, because now wave 3 is not the shortest wave, and we can get an extended wave 5. We've seen that many times before in the cryptos with an extended wave 5. So fine with me. Again, this is still very possible. It does require, once again, a break above around that 70,000 level to really trigger this. So nothing too much out of the ordinary, other than, well, this potential wave 3 kind of fell short of its ideal target zone. If that's the case, then the wave 5 often tends to extend. This is a bit like a irregular flat correction for a fourth wave. If the third wave doesn't do the trick, then the irregular B wave, so you get an A down and then a B wave up, which is longer than the A wave, will go above the end of the wave 3, will get to the target zone. So let's say normally a third wave targets 161.8% extension. Well, we only got to 1.5. Then the irregular flat B wave will get to 161.8. Somehow that is then a magnet for the market, and it's failed to do that a little bit. So in the third wave. So here we are. This is still very valid. Okay. We have 5 waves up here. Comes, I mean, my humble opinion, really clean, but I can be wrong. So we have our warning levels in place, and so far we've not broken below even the first one. Well, intraday, but of course these are on closing prices and not so much on intraday stabs. So once again, if we're going to hold Wednesday's low and then break above pretty much Monday's high, things will really start to kick in gear, and I'll be looking for 78,000 to 84, 85,000, somewhere around there. Then this wave 5 will be underway. I really hope that be the case, but otherwise, again, we can first revisit 63,000, somewhere around there, the 200-day before liftoff. Okay. And I do want to point out, we're going to go over some tweets by other people. This is from a credible, those that are massively followed, so they, kind of know what they're doing. This is from credible, said we have a bounce and then we're going to go to about 61,000. Well, okay, that's pretty in line with what we're seeing. 61,000 would be really low. That would be right at the lower end here of this ideal wave 2 target zone, a 76.4% retrace. Not impossible, but it'd be quite extreme. So again, even a 161.8% extension of wave A measured for wave B, for wave C, does not get us that low. It will kind of stall at 62,000. But you get the idea, just a simple A, B, C. Okay, so somewhere around there. Okay, fine with me. That corroborates this wave count, the preferred wave count. Why I like the nested 1-2. That will really kick us in gear for the November, December bullishness that normally tends to occur for cryptos. And then last but not least, still cannot take this option off the table, where we had just stopped for another stupid C wave or a B wave, so to say, right? Another subdivision of this never-ending slobberfest that we're in. It's very possible. Again, it feels made up. It is still possible, but less likely, but still possible. Okay, if we start breaking below these warning levels for the bulls, buyer beware. Then we can easily visit the mid 40,000. It is possible. Okay, this is still very possible. We topped here right in this ideal C target zone in orange. The C is A here for the gray one, and a little bit shy of this C is A. So this will maybe be a 0.764, which is fine as well. C waves do not always have to equal A waves. Of course, this wave count is completely off the table on a break above the all-time high, and we got awfully close to 70,000. Even above 70,000, this is really not something we want to repeat too often. But for now, this can still be possible. This is our insurance policy. We're not trading it. Okay, we're not setting up for it because it hasn't proven itself. This will prove itself once we start breaking below these warning levels for the bulls. And so far, you can clearly see we're making higher highs and higher lows. This is a bullish sequence. So if we have a bullish sequence, we should not apply a bearish trade other than maybe something really short term, like, so here we're topping out for this potential B wave, right? That's the only thing. This B wave will only be confirmed, of course, on a drop below the A wave, Wednesday's low. Okay. So again, we're always pointing out potentials. And once we finally see the market trending and breaking out, we're going to be much more certain about where things are. So for the last 6 months, it's been mostly projecting potentials. And again, it's taking a long time for this market to finally start breaking, higher. As you can see, we bottomed already August 5th. But we're pretty much back to where we were July. So it's taking a long time to pretty much make up for 5-6 days of decline. It's taking a long time. So that's why we continuously are bullish with a reservation that, what, it's still not 100% certain. Again, this is our insurance policy. It will only kick in, the clause, so to say, will only become activated once we drop below the October 6th low. If you want to short anything, I would wait for that. Okay. Or start buying. I wait for that, something like that. But for now, it's just a possibility. And last but not least, okay, so we have this, failed breakout, so to say, to contest ourselves with. This is what we have. So was this orange trend line more important than this red one, which is kind of odd because the red one touches almost 1, 2, 3, 4 times on the top and 1, 2, 3, 4, 5 times on the bottom. So this is a parallel one. So you think the red one is more important, but the market is the final arbiter, not me. And trend lines are a little bit more subjective. So this orange trend line all of a sudden seems to be very important. Okay, well, let me put it like this. So if we break above this orange trend line, it's now just at about 69,000. Then I'll be looking for that 76 to 83,000. Currently, it looks like some sort of retest we're seeing, but we can easily fall through it. Trend lines are not the most reliable ones, but they do show the pattern that's underway and the trend. And that's why I say this is a sideways to down trend, which is technically still a bull flag. Okay. After the massive run up we've seen earlier this year, this is still a bull flag. Okay. If we would go back to January 1st, right, you can still see this is a massive bull flag. We've had a pretty good run in pretty much 2 months. And now we're sideways for 6 months. Let's see here. Topped here mid-March, 1 month, 2 months, 3 months, 4 months, 5 months, 6 months, 7 months already. Oh, wow. Yeah, we can add on another month. Anyway, we're going to look at some other credible people. This is from Titan of Crypto. And here is a simple buy-sell crossover that has worked every single time. Remember, science says 60% of the time it works every time. Anchorman, Ron Burgundy. Well, was his co-anchor, I think, or colleague that said it when he puts on the tiger perfume. That's a wonderful scene. 60% of the time it works every time. So here we are. We haven't even crossed above it. Okay, so please be patient. But once we do, history tells us we'll see plenty of upside. Not there yet. All right, then we're going to look at what they say, year-end rally. It's very possible. Looks like also here we're starting to see a breakout, and this one projects into as high as the 100,000s. It's very possible, okay? I'm just using initially standard Fibonacci-based extensions and symmetry targets, but we can easily extend. Once we get going, we can, of course, adjust and we move our stop levels up and our warning levels, and then we'll just let it unfold as is. So this is, I believe, a weekly MACD crossover. Again, it's just comparison to one. I haven't really looked at it myself, but again, it's pretty bullish. Here as well, this is the same chart. We had a breakout and pretty much a retest going on so far. If you do this on closing prices, okay, so this is 1 week. If you do this on closing prices, I think closing prices are more important than inter-week stabs higher, though of course they matter, but closing prices are more important. And again, that should suggest a continued rally. So it's still all very bullish. All right, looks all pretty good. We can go down the list here, but let's move on to CryptoCon. And here as well, this is an interesting one, posted an hour ago, where we see pretty much the liquidation spike we had earlier this year, which surpassed that in 23, COVID, all these black swan events, massive liquidation spike, so to say. So this really suggests that once we get these spikes, it's not the end, it's often the beginning, right? That's what is the message here. It's the same with the VIX, for example. If the VIX spikes, you often get very close to a bottom. If sentiment gets extremely bearish, we get often very close to a bottom. Market tops can stay bullish for a lot longer, but bearishness often is a one-day event or maybe a week event, and that's it. Tops can last for many, many times. So often bullish sentiment is not really a true good indicator for a top, with, of course, the usual exceptions. And here we have another one, again, where we are from a oversold perspective, getting very oversold, very low volatility, which matches with what we've seen in previous periods. And low volatility is always followed by high volatility, okay, meaning price expansion, etc. So there's still a lot of good stuff going on. This is, for example, another indicator, and we're getting close to what here it's called the volume oscillator super signal, quite oversold. And oversold is often a low risk buying opportunity, right? Doesn't mean it's going to be no risk, it's a low risk. So once again, we're getting there. We're starting to set up apparently for something bullish, which our wave counts 2 out of 3 suggest is the case. And then we'll see how far and how long this wants to rally. I don't think we're going to see these 10,000%. As you know, Bitcoin is in a log growth curve, which means the growth will move lower over time, right? So from 1 till 2 is 100% gain, but going from 60,000 to 120,000 is also a 100% gain. But the amount, of course, in number total is much, much higher. So I don't think that's what we're going to see. So the growth percentage will slow down. So with that, we'll probably go into single or double to maybe triple digits, but not quadruple digit percentages anymore. That's fine. Still plenty it can be caught. So BITO, also here we have the potential nested 1-2-1-2 setup in place. So far, once again, just a retest of this breakout. So we have 1-2, 1-2, 1-2. And this wave 2 also here can easily bottom around 1850 to 1750. And then we move on, so higher. So I've placed here an ideal bottom for gap fill here at around $18. And then from $18, which will be a retest of the 200-day moving average over a couple of days. As I said, maybe early November before the elections. And then after the election, we get our relief rally. Then we have the 3-4, 3-4, 5 setup going into 25. And again, the symmetry target is 25 for BITO, which could match really well with this potential Elliott wave count, all contingent on holding above the October low. That's pretty much where we're at. If we don't hold above the October low, this cannot be a wave 2 in gray, because it cannot go below the start of this gray wave 1 or the end of this gray wave 2. But again, it looks impulsive to the upside for this wave as well, and then still corrective to the downside. And let's see here, we're above the 200-day, we're soon above the 50-day, or still above the 20-day, and soon the 50-day will above the 200-day as well. So this is still a bullish looking chart. All right, so that's good. So we remain bullish. Then here we have Solana. Solana so far appears to also follow a impulse pattern. Normally the third of a third wave tops here at the 100%, as you can see here, pretty close. This one, the 3 of 3, well, technically it's 3 of 3 of 3. And we're right here in the ideal gray wave 4 target zone. And then we should see a wave 5 contingent on holding above these warning levels. So far so good. I can count an impulse pattern up here from the October low. That's pretty good. 1, 2, 3, 4, 5. And still all question marks. We have not confirmed anything yet, because technically we're still, of course, trending sideways, right? We're back to where we were in July, which is where we were in May, June, and you know what? You know, it's also been a mess. So this is still also potential, but it's filling in reasonably well. So normally this wave 3 should top here at this red 100% extension, which it's doing. And it should top at around the 123.6%. It's not on the map of this green wave. It's a little hard to see here, this green wave. So that's also reasonably okay. And if we now bottom and hold here above, I would say 160, if we can hold above 160, we can allow for this wave 5. So, and that would then target 190 to about 200, drop back, etc. So we'll keep this as our preferred wave count until proven otherwise. Otherwise would mean this. Now remember, we've now broken above the third warning level for the bears, which was about, I think, the 160 level, right? So we've broken above it. So it's this point, it still looks like we're just doing a simple retest of that level, which was this late August high, which was the late September high, and here the early August high as well, right? So it's very critical that we hold that level, 160, and then move higher. And ultimately, if it breaks above 195, I think the bulls are in very good shape with this preferred wave count. If we get this wave 5, then I'm starting to take the question marks away for the 1-2-1-2 setup, and then only 4-5s will be question marks. So starting to look good. But again, due to this sideways price action, where price is still pretty much where it was March of this year, this potential remains on the map. Okay, it will not happen until we break. I have now the final warning level 133. If we break below 133, I think we're going to revisit this 90 plus or minus 10 target zone. As you can see here in red, the CSA targets around 100. As you can see here in green, the CSA targets 95. So the ideal target zone would then, of course, be right there. So don't be surprised if that's going to happen. It can happen, all right? It's still there. We don't know what's going to happen geopolitically or regulatory, all that stuff. So neither does the market, right? The market cannot predict the future either. So if something really silly or stupid happens, wherever, whenever, and the market doesn't like it, this is the potential. So this red arrow is equal to this red arrow. This green arrow, I must, of course, add the other green arrow, is equal there. See this? Right, so we have this, and then, of course, we add the equal length there. See that? So that's why it is good to target 100 to 95. I don't think we're going to go much lower. This is the utter support zone below 85. Boy, that's going to be really bad. And that we know because we have, of course, this monthly chart still, not commodities. We don't do commodities here, though I can highly recommend them. That's something else. If you're not in commodities, you're missing out hugely. Hugely. Commodities have been the name of the game. So again, if we break below 85, we're going to visit 45, right? So this is truly massive support. So that's why we cannot break below that 80, 85 zone, because we're going to revisit 45. And then all we got was indeed a larger ABC higher. And I think we're going to revisit the 20s, maybe somewhere around there before we see another leg higher. But our preferred wave count still remains that this is a sideways bull flag consolidation that eventually will break higher, and 210 will target 300 based on symmetry and all that good stuff. This is still possible, but keep it as your insurance policy. All right. So we start breaking below these levels that you're not comfortable with, then you know where this is going to head based on simple CSA relationships, support, resistance, all that good stuff. All right. So that's where we are on Solana. TRX, how is Tron doing? Well, so far so good. I think we were alerted to it first time a couple of days ago, and it's been moving higher as expected. Looks to be in some sort of expanding ending diagonal. I expect it to move above the August high. Okay, this is still a 100% bull market for the short term, as it is above the 10, the 20, the 50, all those good stuff. All right, it is a bullish looking chart. So we expect higher prices. And the same, of course, you could see in the monthly chart, which was also pointing higher. I have no wave count on it yet, still working on it. But just if you look simply here, this is an impulse higher, okay? This is 5 waves up. Then we have 3 waves lower, and we're again, probably in another 5 waves higher. Okay, so this is what we're looking for. Now, here's another one that can be thrown in the same bin as Ethereum. It's just garbage. um, it's trying to break out above that 19 level, but it got rejected by the 200-day. We had the red arrow. We said we have to get above the 200-day, and again, a false breakout. It just peeped its head above it, zero follow through, and we're right here at the second warning level. So I'm not going to give it too much credit until I see this thing break above the 200-day moving average. That will change my tune. For now, it's been below it since end of July, and that's a bearish setup. And this still looks like some corrective pattern. This could be a irregular expanded flat. So then this is wave A, and this is wave B, and then this is wave C, something like that. It just looks ugly. Don't like it. Yes, we had all this positive divergence, but price is unable to recapture a 200-day and stay above 19. It needs to break above it, hold it, something what we saw similarly here, break above it, hold it, and then rally, right? Break above it, hold it, and then rally. So it's not doing it. Instead, it's moving lower. So it doesn't look too good, which is also disappointing. Definitely, there's a lot of disappointment, I think, going on in the crypto world right now, which also, again, tells me that we are getting closer to the end of a large cycle and not the beginning of a large cycle. And that is, of course, my bigger picture point of view, that we are wrapping up a fifth wave of a larger top than what we had, for example, in 2021. So every larger top will be of a degree higher. That was probably like a primary 3 top with a primary 4 low in 2022, and now working on that primary 5 to complete a cycle 3 and then a cycle 4, which will of course be devastating than 2022, etc. And that's how we cycle through it. Long term, still okay on Bitcoin. Some people ask me about Warren Buffett and stuff. Well, again, Warren Buffett is a value investor. He buys companies. He doesn't buy cryptos. That's not his way of thinking. So that's why I think he doesn't understand Bitcoin, because it's not a company. He buys insurance companies. He buys pretty much 50% stake in Coca-Cola, that type of stuff. That's what he's interested in. Nothing against it, man. I wish I could do what he does. It's just a different way of investing and trading. And that doesn't mean that Bitcoin is crap just because he says so. Always make sure that you understand who is saying what, right? If a crypto expert says, all right, Bitcoin is this and that, then it's better to listen than to a value investor, so to say. All right, enough for this weekend. Take care, trade safe. I hope these charts are of use to you so you understand where we are. Bottom line, we're still in a sideways mess. The nested 1-2-1-2 would be a beautiful setup. I hope we're going to get it. That would be beautiful. It is still very possible. If so, we're getting very close to that third of a third wave. All right. If we're going to get that one, my life is going to get much easier. Your life is going to get much easier. You will stop hearing me bashing some of these cryptos. But again, we need to see, of course, follow through. Once we get that, we'll be good. We need to hold above the October 6th low for sure. And if we can do that, I think all things considered, we still are in good shape despite this 7 months of a disastrous sideways mess. But once again, final words: the longer the base, the bigger the rally. Take care, trade safe, have a great weekend.